My thesis is that there's going to be one last crash in that sense of, the debt pyramid crumbling down, and then central banks are going to have to move all over the world. And
Right.
once they do, then I think there's going to be an end game. And now we could discuss, is that going to be the last one? Or is there going to be another cycle? Like, let's say the last one was in 2020, one
Right.
before that was in 2008. Is there going to be one in 2024 and then, wait another 2-3 years and there's going to be another final one? I don't think so. I think there's going to be one final one. The point is that the dollar is dying, and it's going to die completely at some point. And once it does, it doesn't matter what your dollar profits are. So yeah, you have to kind of switch your mentality from trying to use gold and silver to make dollar profits to using your dollars to stack gold and silver and then getting out of the dollar system. It's the dollar system
Right.
that's the problem.
The global financial landscape faces mounting challenges as debt burdens continue to grow, exacerbated by the economic fallout from the COVID-19 pandemic. This escalating debt crisis now threatens living standards, with even wealthy nations like the United States feeling the strain. Financial analyst Rafi Farber predicts a major debt collapse by late 2024, with central banks likely to intervene. He advises investors to shift from dollars to gold and silver as a safeguard rather than for profit. Farber views precious metals as protection against potential economic instability. U.S. federal expenditures highlight the severity of the debt crisis. This fiscal year, interest payments on the national debt are projected to reach $892 billion, surpassing the defense budget and nearing Medicare spending. The Congressional Budget Office predicts interest payments will exceed $1 trillion next year, while the national debt has grown to over $30 trillion, roughly equal to the size of the U.S. economy. The CBO forecasts U.S. debt to reach 122% of GDP within a decade and potentially 166% by 2054. These extreme debt levels could significantly hinder economic growth and stability. Bank reserves are causing concern, with current levels at $3.27 trillion, down from $3 trillion during the last crisis. Rafi Farber warns that another financial crisis could occur if reserves drop to $3 trillion again. He advises investors to buy gold and silver during price dips, especially if reserves approach this critical level. The reduction of the Federal Reserve's balance sheet is linked to these reserve levels. Recently, bank reserves saw their largest drop in 2 years, falling by $286 billion as Americans paid income taxes. This significant decline, the largest since April 2022, highlights the precarious state of the economy. Tune in to explore Rafi Farber's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
End of 2024. Well, I usually don't have hard dollar targets, but I can try to tell you what I see based on what might happen in the monetary system. We have the situation now where QT, quantitative tightening, is continuing. And, that sounds like a technical term and it's annoying, but it basically means the pool of dollars on which to build debt is shrinking.
Mm-hmm.
And at the same time, the pool of debt is growing because people are taking out more debt with less dollars, with less of a monetary base to take out that debt. If we do see some kind of mathematical oopsie with that, meaning like people can't take out debt anymore because there aren't enough dollars on which to take it out,
Right.
then you have the beginning of a collapse of another pyramid. And if that happens, gold and silver should go down sharply, very temporarily, like ephemerally, until the Fed moves. In terms of what gold and silver are going to do until that happens, I really don't know. My thesis is that there's going to be one last crash in that sense of, the debt pyramid crumbling down, and then central banks are going to have to move all over the world.
Right.
And once they do, then I think there's going to be an end game. And now we could discuss, is that going to be the last one? Or is there going to be another cycle? Like, let's say the last one was in 2020,
Right.
one before that was in 2008. Is there going to be one in 2024 and then, wait another 2-3 years and there's going to be another final one? I don't think so. I think there's going to be one final one. And it could easily happen by the end of 2024. But it could take a little longer than that. The key is to understand what's going on and not necessarily look for a dollar target in either
Right.
gold or silver to cash out. And then you say, I made X percent or I made this amount of dollars. Now I can retire. Because the point is that the dollar is dying and it's going to die completely at some point. And once it does, it doesn't matter what your dollar profits are. So you have to kind of switch your mentality from trying to use gold and silver to make dollar profits to using your dollars to stack gold and silver and then getting out of the dollar system. It's the dollar system
Right.
that's the problem. What I've been researching most recently is that I'm seeing that bank reserves are falling. The bank reserves is
Yeah.
basically that high-powered money. It's not quite the monetary base. It's something very close to it. And with the technical differences, doesn't really matter. But bank reserves on which the banks build their own debt is shrinking slowly.
Right.
The last crisis, the regional banking crisis, happened when we were at like $3 trillion of bank reserves. And now we're at like 3.27 trillion. So we've got like a $270 billion buffer, assuming that the crisis fund is at 3 trillion. It could be a little bit higher than that, a little bit lower than that,
Right.
whatever. We could hit that number, in a few weeks, a few months. But once we do, then I would say, like, if you don't have your full positions and you've been wanting to have more gold and silver, if we're at $3 trillion in reserves, then at that point I might wait for a little bit of a swoop down if I'm trading.
Right.
If I'm stacking, it doesn't really make a difference, because once that happens and you're stacking, then premiums go like way up and you don't really save any money by waiting for a better price anyway.
Right. Right.
So just keep stacking is basically the message. I mean,
The global financial landscape is witnessing a significant shift as BRICS member China intensifies its efforts towards dedollarization. Beijing employs a multifaceted strategy to diminish the US dollar's dominance in international trade and finance. China's approach includes forging new trade partnerships based on local currency settlements, persuading developing nations to move away from the US dollar, and leveraging its economic clout in trade negotiations to dictate the terms of cross-border transactions. These efforts are part of a broader push to reshape the international monetary system and challenge the US dollar's long-standing hegemony. Recent data paints a striking picture of the Chinese yuan's growing prominence in global trade. As of March 2024, 52.9% of all trade involving China is now settled in yuan, surpassing the US dollar. In contrast, only 42.8% of China's trade is still conducted in US dollars, marking a dramatic decline from previous levels. Financial analyst Rafi Farber offers a cautionary view on de-dollarization efforts. He argues that alternative currencies remain linked to the dollar-based system, potentially limiting the impact of diversification. Farber also questions the effectiveness of central banks increasing gold holdings as a hedge against dollar instability. He suggests that in a dollar collapse scenario, the value of gold and silver relative to the dollar could be nullified, challenging the perceived safety of gold reserves. Let's get back to the interview.
it's just a mathematical certainty. They have to keep printing more and more and more money. And the world is based on the dollar standard. So if I was a central bank and, I see what's going on with Japan and currency collapses in Argentina,
Right.
and that's being cleaned up a little bit now. And Brazil, I think, Venezuela, South America is like, dead, and other currencies are weakening. So what would I do? If I was a central bank, I would buy gold just to be safe, because that's what even people who don't really quite understand what's going on, that's what they do. It's in our
Right.
DNA. So if you're a central bank, you do that. Now, I just want to say one thing about central bank gold buying. I'm not sure that it matters. It might matter. I haven't really decided on this. The first thing, take a step back for a second. When I see these headlines, let's say the BRICS countries are moving to other currencies and they're diversifying currencies, and other central banks are buying other currencies. I was like, who cares about that? Because other
Right.
currencies are just dollar derivatives. So fine, they're stepping away from the dollar one step down the pyramid or one step up the pyramid, whatever direction you want to say. Other currencies are still dollars because other central banks still own dollars. As for the gold, central banks buying gold, it could be significant, but it might not be. And the reason that it might not be is that once the dollar does collapse, and by that I mean there is no longer an exchange rate between gold and silver and the dollar anymore, which means the dollar cannot buy anything, by the Misesian regression principle, which I hammer home, which is the point of the endgame investor. I try to get a logical backing to all of this so you understand what's going on. It might not matter, because once that major pyramid falls, then the gold that central banks have is going to have to be tested. It's not like they can start a Ponzi scheme from the middle of the scheme, right?
Right.
In order to start a Ponzi scheme, you have to start with basic trust from your clients and a record of profits, a record of experience, and then you can start messing around with stuff and fooling around with your books. What they want to do is they want to say, oh, the dollar collapsed. Well, look, we're the central bank of whatever, the European Central Bank, and we have all this gold, so accept euros because they're backed by gold. Well, why would anybody believe it if the dollar just collapsed? People are going to have to actually be able to exchange this stuff, and the central bank might not
Absolutely.
want to do that. And if they're forced to do that in order to prove that their currencies are worth something, then what's the difference between a central bank has it or you have it? It's much safer if you have it, or not, put it in a vault somewhere or whatever,
Right,
or
right.
a service, than trusting a central bank, who the purpose of their existence is to fool you.
Given the complex economic landscape outlined in this analysis, how might individuals and businesses best prepare for potential financial instability in light of growing national debts, changing global trade dynamics, and the uncertain future of traditional safe haven assets like gold? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.